How well do you understand the impact of inflation on the economy? It's a concept that's about to take center stage this week. In the world of economics, there are several ways to measure inflation. Most people are familiar with the Consumer Price Index, and a few, maybe even the Producer Price Index, but it's the Personal Consumption Expenditures Price Index, or PCE for short, that the Federal Reserve places special emphasis on as its measure of inflation. A bit of a tongue twister, isn't it? But it's an important one. This week, we're expecting the PCE report, which is due out on Friday. It's anticipated to show that inflation picked up in January, rising at a 0.3% monthly rate after a 0.2% increase in December. When we remove food and energy costs, the core index likely rose by 0.4%, double the rise of a month earlier. Now, why is this important? Well, this increase in inflation will almost assure that the Federal Reserve will not be cutting rates before May at the earliest. In fact, odds of a June reduction have been growing. Sam Bullard, managing director and senior economist for Wells Fargo's Corporate and Investment Banking Group, noted that the market is currently pricing in about a 60% chance of a rate cut at the June Fed meeting, and between 3 to 4 cuts by the end of this year. While the PCE report is certainly the highlight of the week's economic data, there will be plenty more for economists to stew over, from data on housing, gross domestic product, and twin readings of the moods of consumers. It's a busy week indeed, and inflation is definitely playing a key role. As we anticipate the PCE report, it's clear that inflation is a key player in our economy's performance. But what else is on the economic agenda this week? The PCE report isn't the only economic data that's drawing attention this week. Housing, GDP, and consumer attitudes are also under the microscope. Let's delve into these areas to understand the broader economic landscape. First on our list is housing data. The week begins with the release of new home sales for January. After a strong showing in December, expectations are set for a 3% increase in January. The housing market has experienced bursts of activity as mortgage rates have dipped, spurring new home sales. However, as inflation continues to persist and the economy performs better than anticipated, mortgage rates are on the rise. This upward trend could potentially dampen the enthusiasm in the housing market. Next, we turn our attention to consumer confidence. The Conference Board is set to release its February index on Tuesday. Given the recent economic performance, it's expected that this index will show a modest increase. As mortgage rates rise and inflation remains sticky, consumers have shown an unexpected resilience. Their confidence in the economy has been bolstered, contributing to an overall optimistic outlook. Switching gears, we look at the gross domestic product, or GDP. On Wednesday, the government is set to issue its second reading of economic growth for the fourth quarter. Little change is expected from the initial report, indicating that the GDP grew at an annual rate of 3.3% in the quarter. This robust figure surpassed the expectations of most economists at the start of 2023, indicating a strong performance by the economy. Finally, we take another look at housing, this time focusing on pending contracts for sale. January's figures are expected to be positive, albeit lower than December's. The dip in mortgage rates that spurred activity in December has been offset by bad weather in January, potentially putting a damper on sales. These indicators provide a comprehensive view of our economic health. Yet there's another factor looming on the horizon that could significantly impact the economy. In the midst of this whirlwind of economic data, there's another issue that can't be ignored: the threat of a government shutdown. As we navigate the turbulent waters of inflation and interest rates, the dark cloud of a potential shutdown looms over Capitol Hill. The March 1st deadline for a budget deal is fast approaching, and the stakes are high. In January, legislators put together a temporary solution, a stopgap deal on the total amount of spending, to keep the government functioning and dodge a shutdown. This deal set the stage for a March 1st deadline, by which a full set of appropriations bills were supposed to be completed. However, progress has been slow, almost non-existent. The clock is ticking, the deadline is nearing, and yet a budget agreement seems as elusive as ever. The potential consequences of a government shutdown are vast, affecting everything from federal services to the livelihoods of government employees. What's more, a shutdown could have ripple effects on the economy at large. It could hamper economic growth, add uncertainty to the markets, and even impact consumer confidence. With inflation already a dominant concern, a government shutdown could add fuel to the fire. The stopgap deal made in January was just that, a stopgap. It was a temporary solution to a recurring problem. It's like putting a band-aid on a wound that needs stitches. The issue of government spending and budget approval isn't new, but it's one that seems to be growing more contentious and complex with each passing year. As we head towards March 1st, the specter of a government shutdown looms large. It's a reminder of the delicate balance that keeps our economy running, and the challenges that can disrupt that balance. It's a testament to the importance of effective governance in maintaining economic stability. As the clock ticks towards the deadline, the specter of a government shutdown adds another layer of complexity to our economic landscape. In the coming days, all eyes will be on Capitol Hill, watching and waiting to see if a deal can be reached in time. As the week draws to a close, let's take a moment to reflect on the key points we've discussed. The PCE report, a significant indicator of inflation, is expected to reveal an increase for January, suggesting a rising trend. This, coupled with other economic data, such as housing and GDP statistics, paints a comprehensive picture of the current economic climate. The potential for rate cuts by the Federal Reserve is also a significant factor to consider. With the market pricing and a 60% chance of a rate cut at the June meeting, we're keenly watching for signs of change. And let's not forget the looming threat of a government shutdown. With the deadline fast approaching and little progress made, this adds an extra layer of uncertainty to an already complex economic landscape. It's clear that this week will be dominated by inflation, with the potential for a government shutdown adding to the economic suspense. Stay tuned as we continue to monitor these developments and their impact on our economy.